Good morning and welcome to 7 at 7 from the Economic Times podcasts, a daily financial news capsule to get you clued in for the day. I am Bhaskar Datta. While you were taking a well-deserved weekend break, a lot has been breaking around the globe. The US Federal Reserve finally laid the ground for what markets everywhere have been waiting for, a rate cut. At home, in a development that came after many protests from various sectors, the centre approved a unified pension scheme which seeks to provide a certain kind of assured pension. Meanwhile, the Securities and Exchange Board of India has slapped a 5-year ban on participating in securities markets on Anil Ambani, as well as 24 others. The action came after a probe into the industrialist's Reliance Home Finance Limited, which showed that funds were allegedly diverted through dodgy loans. On the international front, the dollar weakened globally today, setting the stage for stronger emerging market currencies like the rupee, after Federal Reserve Chair Jerome Powell said at an economic conference last week that the US is poised to begin cutting interest rates. This marks the end of a couple of years of extraordinary rate hikes in the world's largest economy, which rattled markets across the globe. A rate cut in the US, which essentially translates into lower borrowing costs, typically improves the appeal of relatively riskier emerging markets such as India for global investors. However, not everything's hunky-dory, as Japan, the world's third largest economy, is on a path to hike interest rates. This poses the risk of global funds moving out of some EM economies towards the East Asian giant. Further, the expectation of greater economic momentum that has been brought about by the anticipation of US rate cuts and fears of an escalation in the conflict in the Middle East pushed up Brent crude futures by 0.5% to $79 per barrel. Remember, rising oil prices push up India's inflation and trade deficit. Turning to another Asian giant, Bank of China's Vice Chairman and President Liu Jin has put in his papers citing personal reasons. Liu's departure comes 17 months after that of former Bank of China President Liu Lang, who subsequently pleaded guilty to taking bribes worth more than 100 million yuan. China, which has stepped up an anti-corruption campaign, has been suffering economic volatility over the past couple of years, as its post-COVID recovery has been patchy. At home, Indian stocks may get a boost this week, tracking gains in US stocks after Federal Reserve Chair Powell's comments on rate cuts.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
The Dow Jones Industrial Average rose 1.14% on Friday, while the Nasdaq Composite Index and the S&P 500 indices gained 1.47 and 1.15% respectively. From a rally in global markets to a fillip in global investment, the government is considering a plan to allow full fungibility between foreign portfolio investment and foreign direct investment in sectors where 74% or more of FDI is allowed. What does this mean? Well, right now an FPI or an investor group can hold only up to 10% equity in a listed company. More than 10% is allowed through FDI. The fungibility would allow individuals the freedom to freely manage investments. So even portfolio investors will be able to pick up more than 10% stake in a company. Remember, in her budget speech, Finance Minister Nirmala Sitharaman had outlined 3 objects for simplifying FDI rules: facilitating foreign direct investments, nudging prioritization and promoting opportunities for using the Indian rupee as a currency for overseas investments. Just as an aside, foreign investors have infused rupees 11,366 crore in the Indian debt market so far this year, pushing the net inflow tally in the debt segment to over rupees 1 lakh crore. On to a different kind of FDI. The food industry has been garnering some direct investment and deal-making of late. ET has learned that Singaporean sovereign fund Temasek is in advanced discussions to lead a $100 million to $150 million investment in Rebel Foods, the company that owns Behru's Biryani and other cloud kitchen brands. The proposed deal will be a mix of primary and secondary share sales, with the Mumbai-based unicorn being ascribed a nearly flat valuation compared to its previous round 3 years ago. Remember that the company crossed over to the $1 billion valuation club in October 2021, following a $175 million round that valued it at $1.4 billion. Corporate governance. The government is setting up a new platform. On this, companies would be nudged to give consent to bankers and auditors for uploading the information of funds lying in multiple bank accounts, as well as borrowings from different financial institutions. Once a company allows the banks to share the details, the data would travel in an encrypted form from the bank's servers to the platform, and the auditor may register with it to access that information. With this, an auditor can compare the set of information shared by the borrower with the information provided by banks. If the two pieces of information do not match, the process has to be repeated. Pretty cool, Moving to the topic that has worried government officials and economists alike: pension schemes. The Unified Pension Scheme for central government employees may require a significant one-time allocation in FY25, but that may not majorly impact the government's fiscal math in the years ahead. Economists told ET, the union government's contribution is likely to increase by 32.1% from the national pension system and could be around 40,000 to 45,000 crore rupees in FY25, said one of the economists. Remember, the pension scheme seeks to provide an assured pension of 50% of average basic pay over the last 12 months before retirement to employees who have worked for a minimum of 25 years. That's all for today. Thank you very much for tuning in to 7 at 7 from the Economic Times podcasts.